Over 70% of all U.S. mortgages rely on just two companies, Fannie Mae and Freddie Mac.
The vast majority of home loans today are backed by the federal government, Fannie Mae and Freddie Mac.
Fannie and Freddie are the banks that support 70% of all the home loans that happen in the U.S.
And now reports say that the Trump administration is getting ready to take them private again.
Fannie and Freddie used to be private companies, but since 2008, they've been under close government supervision.
President Trump himself has indicated that he wants to roll back the government's involvement in the two companies.
Fannie and Freddie private again.
If that happens, borrowing costs could skyrocket. Mortgage rates could explode past 9%, and millions of Americans could be locked out of home ownership.
Without an explicit government guarantee on the Fannie and Freddie MBS, mortgage rates would go up 75 to 100 basis points, and even more for lower credit-worthy borrowers.
This isn't just talk. Something big is about to happen. And even the Federal Finance Housing Agency's COO and head of HR were all just fired.
The CEOs, COOs, and HR heads at both Freddie Mac and the Federal Housing Finance Agency, FHFA, were fired.
If that sounds familiar, it should be, because the last time Freddie Mac's CEO was suddenly fired, it was 17 years ago. September 2008, right before the housing market collapsed. During that period, the U.S. government stepped in with $187 billion bailout to save Fannie Mae and Freddie Mac from a full-blown collapse. Now these two mortgage giants control nearly $12 trillion in home mortgages.
Fannie and Freddie now back about half of new U.S. mortgages.
Without Fannie and Freddie mortgages, fewer loan options would be available, meaning stricter lending standards, higher down payments, and a reduced pool of home buyers. For current homeowners and sellers and people looking to refinance, it could become impossible as mortgage rates continue to go up. And this isn't just a minor policy change. This could reshape the entire real estate market overnight. So what happens next? Will the real estate market crash? Or the rental market explode? Let's break it all down. What exactly are Fannie Mae and Freddie Mac's role? And why do they matter so much? These two government-backed agencies were allegedly created to make housing more affordable for Americans by buying mortgages from banks and reselling them to investors. This allows banks to lend more money at lower interest rates, keeping the housing market moving.
Homeowners borrow money from banks or other lenders. Then, Fannie and Freddie buy these mortgages and package them into securities. Then they sell those securities to investors.
Right now, they back 70% of all home loans and $12 trillion worth of these mortgages. Meaning if you have a mortgage, chances are it's tied to them in some way. But now the government is talking about taking them private again.
Trump administration in the U.S. is looking at plans to reform the nation's housing finance system. One key piece is to privatize Fannie Mae and Freddie Mac.
If this does happen, we could see the entire mortgage market flipping overnight. Without Fannie Mae and Freddie Mac's backing, banks would ultimately take on more risk without the government's involvement, and interest rates will continue to go up. Much larger down payments and much stricter lending standards. Mortgage rates could easily jump to 9, maybe even 10%. Fewer people would qualify for loans.
Unlike banks, these firms don't have deposits, which means it will be more expensive for them to lend money if Fannie and Freddie go away. These so-called non-bank lenders make up about half of new U.S. mortgages today, and they're often the only path that first-time borrowers or middle-income families have for getting a mortgage.
Think about a hard money loan or a bridge loan, which you would receive from a private investor. These rates may be 10, 12, 15% interest depending on the borrower. If we start to see a lot of these lenders pulling back and banks pulling back and lending standards tighten, we could see interest rates follow and go much higher than what many home buyers are accustomed to. This would likely equate to much less demand for home buyers and a much harder time to sell one's home. And the market could freeze because home buyers can't afford to buy even if they wanted to. And this isn't just about first-time home buyers. If you already own a home and are thinking about refinancing once interest rates drop, that might not happen, and instead could be trapped in your home with nowhere else to go. And it's not just residential real estate. Commercial real estate is in very big trouble as well. Unlike residential real estate, where one may get a 30-year mortgage. Commercial real estate, it may be a 3, 5, 7, or possibly a 10-year loan that needs to be refinanced. But if Fannie Mae and Freddie Mac go private, these loans will get even more expensive to refinance. That means fewer rental properties will get built, reducing and contracting future supply that would otherwise come to the market. Landlords suffering under these higher costs will have no choice but to continue to increase rents, and fewer people will have less options. Fewer people will be able to buy, pushing rents even higher. So as landlords are suffering higher costs and homeowners having a harder time to sell, we will see investors stepping in, likely acquiring more and more properties, turning them into rentals. We're already seeing half of all U.S. renters struggling to afford rent.
Half of Americans are struggling right now to make their house payment.
People are spending half of their income on rent.
My rent is extraordinarily high for what I live in.
And this could make things even worse. So what happens next? In 2008, the entire economy crashed because banks were lending to anyone with a pulse. You have one person, 3, 4, 5 homes, they're only making $50,000, $60,000 a year. No income, no documentation loans. It was a crisis waiting to happen. It created a massive housing bubble. And we're now seeing the opposite problem. Instead of too many loans, like what we saw in 2021 and 2022, we're now seeing many people failing and getting rejected on their mortgage applications. And now, currently even less loans than what we've seen since 1995. And believe it or not, in most markets, home prices are skyrocketing with less sales, limited inventory, and all cash buyers. But this situation could force a collapse if we see less buyers able to go out there and buy, many homeowners unable to refinance or borrow against their properties, as the job market starts to stall or walk into a significant problem in the coming year or so. The last time Freddie and Fannie were in trouble, the government bailed them out with roughly $190 billion. But this time, if they go private, there will be no government safety net. But here's another crisis. Property insurance and property taxes are skyrocketing to levels many people can't believe. Even if you own a home, your own costs are going up. Insurance and taxes are going up nationwide. And with borrowing becoming even more expensive, selling your home could become harder than ever. Now, what I think is very likely going to happen in the coming 6 months, year, 2 years, and 5 years is we will see individual buyers having a harder time acquiring their properties. We'll see large corporations stepping in, looking to invest. Why do they want to do that? Well, supply and demand dictate and determine value in most cases. And many of these large corporations are sitting in so much cash. They have so much money. There's $6 trillion in money market accounts. What are they going to do? If they believe the world's going to be inflationary over the next 5, 10, 15 years, they're likely going to want to get out of the paper and into hard real assets. Affordable housing, distressed commercial real estate, farmland. They're going to want to buy things that are going to hold that value and produce an income. If you have a lot of these home buyers that are getting priced out of their homes with very motivated home sellers, you may see a really big opportunity here. Look at FHA home loans, you got 1 million of them in delinquency. It would not surprise me to see big banks like JP Morgan Chase, Bank of America, Wells Fargo looking to offload a lot of non-performing debt to a lot of these corporations for a fraction of their true value. So I believe we're walking into a major wealth transfer, a huge shift of wealth. But I'm very curious as to what you think. Where do you see all of this going? Do you think we're walking into a major reset in the housing market? I believe the big bet here is on where the world's going to be going in the next couple of years. Everything is going to be about affordability. Look at the cost of the world. If you were to look at the financial situations of, let's say, 10 people closest to you in a coffee shop, and you could see the true state of their problems, you would realize that we're in a silent depression. A lot of people are pretending like everything is okay, everything is fine, but in reality, behind the scenes, a lot of people are really struggling. And I think large corporations know this, big banks know this, the government knows this. And if you're a big corporation and you knew the true state of pain that most Americans were in, where would you invest your money? You'd probably invest it to capitalize on the affordability crisis. Probably wouldn't buy $500,000, $600,000, $800,000 homes to rent out to the general public. You would buy the cheapest homes, nice homes, but the cheapest homes to offer the biggest yield. That's what I think is going to be happening. That's the bet that I'm personally placing, is I bet that the affordable markets in the next couple of years won't be affordable. Let's have a conversation about this below. If Fannie and Freddie go private, if this does happen and borrowing costs skyrocket, there's only so many affordable housing markets left in this country. If you'd like to learn more about what we're doing in Ohio, in Cleveland, go to singlefamilyinvestors.com. That's singlefamilyinvestors.com. If you have $100K or more that you're considering to invest, you can click the link in the description just below this video. Schedule a free call. Catch you next video.